Hey there, YouTube family. Today I'm going to be doing a lightning round for Tesla, NIO, Rivian, BYD, and liauto. The market is still attempting to process Tesla's slashing prices in a bid to sell more cars in the last month of this first quarter of 2023. Elon, though, has repeatedly assured the market that demand and interest remains very strong for Tesla. The market, though, has to sort out Elon's bullish hype from reality. Do these price cuts devalue and commoditize Tesla's brand, or do they do as Elon says, they're going to boost sales and strategically snatch market share away from competition? Because of the high stock valuation that Wall Street places on Tesla stock, currently trading at a forward PE ratio of 51.55, analysts have to remain hyper-vigilant to determine if Tesla is facing any kind of sagging demand, which would even be worse if it was sagging demand with lowered margins. After Tesla skyrocketed from the low of $101 in early January, they simply cannot afford to make a single mistake, or the stock could crash. If Elon is right about the forward guidance that he gave after quarter four earnings and then doubled down on Investor Day, these price changes may be a flex for Tesla, serving to establish their lead as the dominant EV supplier by creating that proverbial moat around their ever-increasing scaled manufacturing. Elon repeated the demand narrative when he said the desire for people to own a Tesla is extremely high. The limiting factor is their ability to pay for a Tesla. Last week, I provided fresh technicals on Tesla when it was trading above 200, and I predicted that Tesla was going to struggle to maintain any kind of strong momentum above $196. Despite the market's rallying Thursday, Friday, and this morning, lo and behold, where is Tesla today? Sitting at the end of the day at $193, below that $196 critical level I gave. Also in that video, I gave my analysis of support and resistance moving forward, establishing what could perhaps be the current trade range for the next couple months until we get quarter one 2023 earnings. That range being that we have max support down beneath us at 171, and we have current resistance perhaps establishing at 196. Now, I always want to remind you guys that Tesla could easily break up above or beneath those support ranges. It would simply take new news that the market hasn't processed yet. But barring any major news event, in my mind, that looks like the trade range moving forward. And that means the trade range is going down, not up. The immediate impact of Tesla's price changes are sending shockwaves through the entire EV industry as they are taking what I believe is the easy money off of the table for all of EV competition. Another news flash this morning was EV manufacturers have to slash prices to keep up with Tesla. We know that the less established EV companies have attempted to capitalize on Tesla's success, but they just lost the easy button. They got financially squeezed when Tesla lowered prices. Now we know that these companies, they're already losing millions, but now they have to tighten their belt more, or they could lose one thing that they really can't afford to lose, and that's market share, units produced. Now we have seen already that when people miss production marks, it can have a huge impact on a stock. Take NIO, for example. They hit 40,000 vehicles. It was shy of the market expectations by just a couple thousand, even though it really was a huge success, and the market took them out behind the proverbial woodshed for a beatdown. Let's talk about NIO. Last week I said that NIO was significantly oversold, and that some of the worst news that the markets needed to process was behind them after the quarter four earnings had been released. That the stock price seemed to have been finding a decent support at the $9 range. And I said that it needed to hold $9 or it would see a capitulation moment. But that capitulation moment and the processing of the bad earnings data might be setting up for a bullish moment. And we saw all of that. NIO broke $9, flashed down to $8.31, and then we saw some buying volume come into the stock, pushing it back above $9.64. But we got some news today. NIO has been handed another blow, the Tesla price cut aftermath uppercut blow. The news headlines read, NIO stock falls after tactical downgrade by JP Morgan on margin concerns. Tesla has dried up that easy money and they filled the moat with the crocodiles. JP Morgan believes that as NIO's margin rate deteriorates, it's going to lead to further missed delivery goals. With this downgrade on news, we've seen the NIO stock price pull back under that critical level of support turned resistance that I've given you guys of $9.50. In my view, that is and will be the spot. It'll be the do or die price range for NIO in the days ahead. Right now, today, it's sitting at around $9.30, which isn't good. NIO has to retake that level very, very soon to have any chance of remaining bullish in the couple months ahead of us. If 950 officially becomes resistance, which in my mind it technically looks like it already has become, 950 will become the top of the range moving forward, which means that it needs to discover the bottom of the range, which I've already given you guys. I did a video on this sometime last year. I told you guys that NIO had a very strong potential of hitting $6. NIO could easily break down below $6 to the $5.60, $5.90 price range. If NIO does not reclaim 950 very, very soon, I think we will see a $6 NIO. The bottom line is that after NIO's fourth quarter miss, if quarter one 2023 margins begin to trend down, the significant improvements that they've promised Wall Street in quarter two will yet again fall short of Wall Street's expectations, all due to the increasingly competitive environment. The massive target of 240 to 250,000 deliveries for 2023 is looking more and more ambitious and overly optimistic as we get further into 2023. Some analysts are expecting NIO to only hit 190,000 deliveries for the year. Now, a realistic price target for NIO at this point is now between $10 to $14 by the end of this year. Now, don't take any comfort in that number because it's kind of close to where we're at, because NIO is very likely going to fall to 6 or reclaiming 10 at some point in the next couple quarters. It's not all bad news. I am bullish on the Chinese economy, so there is a best case scenario for NIO, and that is to stay range bound potentially for the next 6 months, and then there could be a possible inflection point coming in the third quarter. Now, I don't trade NIO. I'm a Tesla guy. Like I've said before, I'm doing this simply for you guys. This is the Stocks with Josh show. Say hi in the comments. Let me know your thoughts on NIO and Tesla. Thank you for hitting the like, subscribe, and hit the YouTube all notifications bell to get daily stock and crypto, technical and fundamental analysis. We're trying to navigate this crazy, turbulent 2023 market. Don't fall for the scammers. They use my name and my picture. They try to ask you guys to DM them on WhatsApp and Telegram. That's not me. If you need better trade tools, check out the offer from the Moomoo investment app. They're currently giving away 17 free stock. Click on the link in the top pinned comment to get all the details of this exclusive and limited time offer. Okay, I'm going to give you guys the lowdown on a couple of the Chinese EV plays that are showing signs of strength, not weakness. They need to be on your guys' watch list. You guys know that I've talked about BYD in the past. BYD is China's largest manufacturer of EVs. The company is actually outpacing Tesla in sales. They sold 1.62 million cars between January and November of 2022 compared to Tesla's 1.37 million for all of 2022. BYD is taking a careful approach to entering the US market because of the ongoing geopolitical tensions that seem to exist. But if you want to buy the stock, you can buy it directly on the Hong Kong exchange. You can use the Moomoo app to do that. If you want to buy it in the US market, you use ticker symbol BYDDF. Now, some argue that BYD is better than Tesla because BYD not only has more competitive prices currently, but they also have better control over the supply chain. The ability to produce their own chips, their own batteries, and their own semiconductors, which really puts into perspective the overall message that we got from Elon on Investor Day, which his plan was a multi-year plan to create vertical integrated supply chain for long-term sustainable scaling, which some would argue who are bullish for BYD that they've already got in place. Is Tesla trying to catch up with BYD? I know some of you Tesla guys hate that I said that. BYD is trading at a 34% discount from its all-time highs. It was trading at $4.50 back in 2020, and from $4.50 to the high of $41, it saw a nearly 1,000% increase in just 2 years. BYD's forward PE ratio is lower than Tesla's at 36.10. Right now, BYD is above a critical fib support level of $28.39, but below the 50-day moving average. For the short-term trend to become a confirmed bullish move, we'd need to see a close back above $29.35. I do like the look of the current MACD line. It's getting ready to cross over the signal line, and this could be pointing to a potential bullish move ahead. All right, I'm going to throw some fresh technicals in for Rivian because I covered them a couple times in the last couple weeks. These guys seem to be consolidating and finding support above $16. Now, I think Rivian potentially favors a move up to around $21. That's if the markets don't get absolutely annihilated this week by the Fed's talk or a strong jobs report. Okay, the last stock that I want to quickly cover today is the Chinese EV stock that seems to be showing some strength in the charts, and that's Li Auto. And I'm going to keep my technical analysis super simple. It seems to me that ever since Li Auto came back and hit its 50-day moving average, it's bounced and it's continuing to show some strength. Li Auto delivered its fourth quarter revenue that was at the high end of the company's guidance. Vehicle profit margin of 20% was also in line with expectations. They reduced their net loss forecast for 2023, and they strengthened their stance, their ongoing position that Li Auto is going to be profitable in 2024. Li Auto has a fair value estimate right now of $30.50. It's currently trading at $25. It also seems to be range bound between $18 on the low end and $32 on the high end. I like the RSI and the MACD right now on Li Auto, and I just want to give you guys two thoughts to consider about this particular play. Li Auto is clearly showing relative strength, and if you can accumulate it at a discount below $30 and they do achieve profitability in 2024, which the market seems to be, by its bullishness, suggesting that they might, I believe that those who hold a position in Li Auto will see a reward handsomely or bigly when they hit profit. Number two, I want you guys to consider looking at all of these stocks right now as they're performing after a very tough year in 2022 and a recessionary moment here in 2023. How are they doing? Are they thriving? Are they showing superior relative strength in the charts? Are they positioning themselves to be the best in-class leader in their respective sectors? I'm going to let you guys decide today. I've already given enough opinions on all of these companies. I want you to let me know in the comments who that is in your eyes. Which of these companies that I've talked about today is positioning themselves to be best in class in the days ahead? It's the last call to hit the like. If you've made it this far, then go ahead and subscribe. Tomorrow, the markets are absolutely going to react to the Fed talking. It should be a volatile day at bare minimum. I just want to wish you guys all great success in your trading. As always, peace and blessings, my friends. I'll see you in the chat.